Hi everyone. Before we begin, just a quick disclaimer. This video is for educational, informational purposes only. It is not investment advice and nothing in this video should be considered a recommendation to buy or sell any stocks. I recently watched a video by Clive Thompson. It's the gentleman here you can see on the screen discussing upcoming changes to the market vector global gold miner index. This is the index tracked by the Van Eck Gold Miners ETF. I will put a link to this video in the description. An interesting detail is that it's the index itself that produces the market vector indices, which is actually a subsidiary of Van Eck. So Van Eck is not only runs an ETF, but their index provider also creates a benchmark the ETF follows. The market vector global gold miner index is designed specifically to represent the global gold and silver mining sector. To be included in the index, company must generate at least 50% of their revenues from gold or silver, meet minimum market cap requirements, meet liquidity requirements, and this index is reviewed quarterly. And when the composition change, very interestingly, the ETF must rebalance to match the new index weights. Other gold miner ETFs exist, but they follow different indices. This makes Van Eck Gold Miners with a ticker called GDX particularly important when this particular index change. The most recent index review took place on March 30th, but the changes were implemented on March 20th. So today is Sunday, so it was Friday this week. That meant that around this date, the ETF would have to buy shares of companies entering the index and potentially sell others. In this occasion, 4 companies were added. It is Greatland Gold, Aris Mining, Centerra and Endeavour Silver. So here I have a link to market vector and the index. The index is called MVGDX that Van Eck ETF is tracking. So a lot of information here, and you can see the dates I just mentioned. Announcement was on March 30th, and it was implemented on the 20th. Next time this will happen will be on June 12th, where we will get a new announcement and to be implemented on the 19th. So what I did is that I created a simply Wall Street portfolio with these 4 stocks. We can also see that that the trend was moving down, although that we had this rebalance. It did not really reflect in the stock market price of these companies. But let's have a closer look of these particular companies. So maybe you already know Simply Wall Street. Otherwise, let me just explain to you that it works with a snowflake. So here you can see 5 characteristics. What I like to see are companies with future, but also with good health. I'm not that interested in dividend companies. So I'm looking for health for the past and also for future normally. So Centerra, yeah, it looks like an interesting company. We can see that according to this source, it's trading below fair use value. Revenue is forecasted to growth this year, and earnings, like in many other mining companies, has grown significantly in the last year. So let's move to Greatland. Good health, good past, but not a lot future. Actually, it checks negative in all 6 boxes. Aris looks much better. This is from a pure snowflake. This is one of the companies that I would personally like to consider. It also says here that it's trading below current estimate. Of course, before I would buy anything, I would go into the details, and you can see this on Simply Wall Street. Simply Wall Street is free software. You can just go to Simply Wall Street and create your own portfolio. Let's look at the last one, a company with a great future, but not that healthy, although 4 out of 6. So this also seems to be an interesting company. But okay, so why is all this interesting? Yes, um, what is interesting to know is that the Van Eck Gold Miners ETF has roughly $15 billion in assets under management. So if a new company receives 0.5% weight in the index, this will translate roughly into 75 million of buying pressure in a few days. We don't know when Van Eck will buy these shares. Maybe they already bought them. Maybe they will do it tomorrow, Monday, the 23rd of March. Um, but this will create buying pressure. If an ETF like Van Eck, when an ETF is buying these companies, um, even a small change of this weighting can translate into $1 million floating into this company or into the stock. For very large companies like Newmont or Barrick Gold, this will not move much, but for smaller companies, these flows can sometimes have a noticeable impact on price. So this is why this is relevant to monitor. And it's also relevant to monitor, just like you saw I did in Simply Wall Street. Simply, are there any quality companies that I would like to consider for my gold and silver portfolio? So the key takeaway from all this is that index changes may look like a but technical detail, but when ETFs rebalance, the flows created by those changes can sometimes generate significant buying pressure in individual stocks. This is why many traders pay close attention to index reviews and ETF rebalances. So this is all for now. Thank you for your attention, and have a great day.